All right. So if anybody's out there, I think we got a couple people just joining us here. I'm going to make a prompt start at in 1 minute. This will be a whole conversation. Hopefully, it's a conversation. If not, it'll be more of a lecture, but talking about the FHA loan program in Puerto Rico and how you can use that program to buy a home here. So I'll give it just like another 45, 30 seconds, and then we'll get started in earnest here with the webinar. So thanks to those of you I can see hopping in. And if you've got questions in the meantime, feel free to drop it into the Q&A or into the regular chat. I'll keep an eye on those things. And if I get some questions, I'll be happy to provide some guidance. Okay, cool. It looks like we just hit 1 o'clock. I am gonna go ahead and make a prompt start here. So thanks to those of you who are joining us here for the this home buyer's guide to buying a home in Puerto Rico using the FHA loan program. This like the first part of this presentation is going to be kind of general, like a bit general about like if you want to know if you qualify for buying a home in Puerto Rico. The beginning will be very, quite general, whether it's FHA or conventional or USDA or VA. And then I'll dive into the details specifically about FHA loan program and specific benefits to using it in Puerto Rico and challenges to using it in Puerto Rico. And so I'll go about the FHA stuff a little bit after. So let's jump right in. Like I said too, there at the top, if you got any questions, if you're joining us here during the live session, because this is going to be posted, like a recording of this will be posted on my YouTube channel. But if you have any questions during the live session, feel free to drop a question or comment or in either the Q&A part or the chat part of the Zoom call here. So my name is Nate Stewart. I'm a mortgage loan officer with a company called CoLab connection that originally brought me to the island. I've lived in a bunch of other places though. I've lived in Guyana, lived in Colombia, traveled a lot, but those are the two other places that I lived. And I'm a father to two young kids. I have a 9-year-old and a 6-year-old. So that all of those folks keep me very busy, but happy about that. And I became a loan officer in 2021 after past life being a professional educator. I was a science teacher that then became like a dean of students. And then I started, I wanted to learn Spanish. So I took a contract in Colombia working at a school there, eventually became the dean of students. And when I was the dean of students, I had to talk more with parents than with students. And so had to learn Spanish. And so that's why if you hear me speaking Spanish, you might notice a bit of a Colombian accent, though now my Colombian friends tell me I sound like I'm Puerto Rican, and my Puerto Rican friends tell me I sound Colombian. So, but anyway, can defend myself pretty good in Spanish. But that's how that's what I was doing before I became a loan officer. So I also have a YouTube channel, which I started because honestly, like mortgages are complicated enough. And then and with the Puerto Rico, nuances and differences about doing business here, things can get pretty complicated. And so I started that channel to just try to provide like some transparency about what is it, what do people need to know? Because I was getting a lot of the same questions from clients, and so figured I'd start producing some content and posting it there to try to help folks out. And so this, like I said, this recording will be posted up there. But hopefully this information will be helpful for you if you're looking to buy in Puerto Rico. And then my whole goal is basically to, rather than like worry about how many loans I've got and trying to be hard on the sales side of things. My whole thing is about like serving others, so that if folks are finding homes and they're finding the information useful, then the business will generate itself and the success will come from that. So that's kind of like my perspective on working now in the business world after having been in education for so long. And so I try to be like a values-driven problem solver. Like my whole goal is to make things as transparent, smooth, streamlined, high quality of service for folks. Obviously, offer good rates and fees, but that so far is been fruitful. So I'll keep doing it until I have a reason to do otherwise. So since I know that everyone's first question is about rates, let's talk about the rates here real quick right at the top. So just this morning, when I was pricing out FHA rates in Puerto Rico specifically, there's a range, right? So like it's for any time that you're discussing interest rates, itch a range of things. This is being recorded, and this pricing is from the 24th of April, in the morning of that day. And so it's possible that this could have changed since then. But this is what I saw this morning. So with paying one discount point at closing, meaning 1% of the loan amount paid up front at closing, I saw that one rate was 6.375 for one scenario. And without any discount points, it was about 6.875. This is lower than where we're seeing right now conventional loans rates coming in, and it's quite variable. So the thing to know that I'd like everybody to know about rates is like this is a snapshot of one moment for one person's scenario because rates really depend on like 20 different factors, right? It depends on how much you're putting down, what's your FICO score look like, is it a single family home or is it multifamily, or is it a condo, where is it located? Like many factors go into identifying your specific rate. And the best way that me or any other loan officer can help you if you're a buyer with identifying which specific rate is to complete an application. I'll talk about those steps in a minute. It's not as crazy or involved. It doesn't hurt your credit. There's a lot of misconceptions about it, at least to go with us. And so, but calling a loan officer and asking him, what's your rate, is kind of like calling a restaurant and saying, what's for dinner, right? Like there's a whole menu of options. There's many things. If you have, you know, specific needs, if you have certain priorities that factor in, like those are things that your loan officer needs to know so that we can advise you and actually tell you the specific rate that you have access to. So FHA, I think the thing to know is that's about where the range is today. And you know, but hopefully, you know, with any luck, we can continue seeing rates go down. But rates in general are dependent on like a bunch of different factors. So to know which specific rate you would have access to, we would want to gather some info about that. The other thing to let you know about rates, whether it's FHA or any other type of loan program, is that there's a trade-off between the rate value and the closing costs. So if you're one of those folks that you just want the absolute lowest rate possible, well, then you can pay more at closing. And going back to this idea of discount points, you can pay more at closing and you'll, you know, basically be buying the rate down because literally what you're doing is giving the lender interest upfront as a payment at closing, and for that they give you a lower rate. Or if your priority is to have the absolute lowest amount of money come out of your pocket to close, well then perhaps you'd be okay taking a higher rate, which can even sometimes pay you what's called lender credit. It's like the opposite of discount points, if you will, at closing. And then yes, your rate might be higher, but so long as the monthly payment is feasible, then you know your closing costs on the front end could be reduced by getting that lender credit. So it's really a trade-off, and that's one of those or two of those factors in that 20 plus that factors into like what rate you're asking. So if you ever call a loan officer and you say, "What rate have you got for me today?" and they don't know anything about you and they give you a number on the phone, they're lying to you, folks, because there's not any way to tell somebody like I can pull a number out of a hat and give it to you on the phone. But what really matters is what's going to be your rate, the closing table, and your cost at the closing table. So as I'm saying here, your loan officer should offer you more than just a low rate. Should be honest, transparent, good communication, structure your loan to meet your needs, right? They're not going to, you know, just willy-nilly change things of the structure, and like that they should be aware of the different types of structures and what that means to their buyers. And so like I said before, real quick, that you know, you should be getting a smooth process from whatever loan officer that you're working with, right? So like at Collab, we help obviously with the pre-approval, but that is only the first step. Then there's like contract negotiation, doing the appraisal, title work, insurance, dealing with the agents on the seller side and the buyer side if there is one. If there's repairs, dealing with contractors. All those types of things can go into it. So having a good loan officer, because it's the loan officer that's going to coordinate all those different entities. And that's what I like to do, me personally, right? So, but anyway, that's just a little bit about like the rates and what you should know when you're shopping for a rate or trying to get a loan, and what you should know about the loan process. So let's talk now about FHA. This this specific section is related to FHA because like FHA loan program can only be used for your primary home purchase, right? You can't use FHA to buy an investment property, can't use it to buy a second home, only a home that you're going to live in full time. And so this would be all of this following information is going to be very similar to if we were talking about VA loan program, only also for your primary, or a conventional program for primary home purchase, or USDA, right? So any type of loan program related to your primary home. Here's what it comes down to, folks. It has nothing to do with the number of days that you're planning to spend in Puerto Rico. Many people will call me and tell me, Nate, I want to buy my primary home in Puerto Rico. I will live there more than half the year. That's nice to know, but that's not what it's going to come down to. What the underwriters are going to want to know, and that they're going to want documentation to prove, is if your source of income on the application will follow you or remain the same with you being in Puerto Rico full time, right? So it comes down to income and documentation that you can provide. Nobody's going to ask you how many days a year do you plan to live in Puerto Rico. Nobody's going to care about that. They're going to ask, can you provide a letter from your employer stating that you can work remotely 100% of the time? Or if your employer is already in Puerto Rico. So let's look at the types of acceptable incomes sources that we can use to help you purchase with FHA. And again, like I mentioned, this is for any type of primary home purchase in Puerto Rico, whether it's FHA, VA, USDA, or conventional for your primary home. So we can use, if you're already employed in Puerto Rico, good to go. We can use that income. If you have, if you receive these types of, income compensations that's not related to where you live, so VA disability income, retired income, Social Security, or pension, any types of those income, those will follow you no matter where you live, right? And so we can use that to help you buy with FHA here in Puerto Rico, assuming that you'd be living in the property full time. And if you can prove with an employer letter that you work remotely 100% of the time, then we can use that, right? Then we could structure it so that you could move to Puerto Rico, purchase your home here, and continue working remotely. There's some nuances to that last one, right? Like some human resources, some HR folks, they don't know how to do payroll for taxes in Puerto Rico. But that's something that that's a whole other conversation that we could talk about. But these are the types of income sources, folks, that we need. If you can't get any one of those things, then I'm sorry, folks, we're probably gonna have a challenge setting up a purchase for you to buy your primary home in Puerto Rico, whether it's with FHA or any other type of loan program. All right. Oh, and also too, if you're self-employed, hopefully you can see that here. I got this thing. Let me move this thing off on my screen. But if you're self-employed and it makes sense to the underwriters, say for example, that you have a business and that you manage a team and that you can do that from a distance and you can write a letter explaining it and it makes sense, then cool. But if, say for example, you're a self-employed truck driver and you have a very specific route in like Texas or something like that, and that's the nature of your business, well, then maybe it wouldn't make enough sense to the underwriters and they wouldn't approve it. But anyway, those are the types of income that we can use for FHA. So here's some basic info about just like when we apply for the loan to address some misconceptions, right? So there's three things that we review on a loan application: credit, income, and assets, literally in that order. Credit is usually like the first thing that we check. And at Collab Lending, I can't speak about any other companies in Puerto Rico, but at Collab, we only do a soft inquiry when you apply, right? So on the application, it literally will ask you, do you consent to us reviewing your credit? And all that means is soft inquiry. There's no hard hit to applying. Our whole idea is that the application is supposed to be exploratory, right? It's supposed to let us play with different numbers, play with scenarios, play with ideas. And it makes no sense to us to hit people on their credit. And also it costs a fair amount more money to do a hard inquiry. So we only do a soft inquiry at Collab. And we could do that an infinite number of times in one day or 2 days or a week or whatever. We could do it an unlimited number of times. It will have zero impact on your credit, I promise, right? So no concern about that. More important than your FICO score, what we're looking for with the credit inquiry is the total sum of all your minimum payments that you have for any open trade line. So if you got credit cards, car loans, student loans, things like that, we're looking for the total of the minimum payments so we can calculate your debt to income ratio. All right. Then we look at income. I already talked a little bit about the types of income that we can use, but for a pre-approval, we're going to request some documents from you. Depends which documents we ask, depends on the structure of your income. If you have an employer, we'd ask for certain documents. If you're self-employed, we'll ask for others. But that's for me to ask you those questions and figure out that info with you. So no worries there. But that's income. And then lastly, assets. So the three S's apply when we're looking at assets. So it's got to be sufficient, right? You got to have enough money in the bank. It needs to be seasoned. It needs to be in the bank. The funds can't come from like cash under the mattress. Can't use cash, unfortunately. but it has to be seasoned, meaning we have to see that the funds have been sitting there available for at least 2 months on bank statements for us to be able to use it. And lastly, it has to be sourced, right? We need some documentation showing where those funds coming from. All right, that's that. Folks, I'll pause real quick. I'm checking the chat. I'm checking the Q&A section. If you have questions, thank you to those of you that are joining here too. That's great. But if you do have any questions, feel free to drop a question in the chat or a question in the Q&A section. Be very happy to help out with that. But great to see a good turnout there. So thank you all for being here. So one very common basic question that we get a lot is, Nate, I have an FHA loan on a property in other state. Can I buy another property with an FHA loan in Puerto Rico? In general, the answer is yes. However, there's some stipulations that need to be met for the second property, right? So the second home has to be more than 100 miles away. That shouldn't be an issue because I think last I checked, Puerto Rico is an island in the middle of the Atlantic and Caribbean Sea that is more than 100 miles from any other part of the continental U.S., right? So now, if you have an FHA loan in the Virgin Islands, which yes, they're in the U.S. Virgin Islands, there's FHA loans available out there. That could trip it up, or the other thing, but otherwise that there shouldn't be any issue with the 100-mile rule. Though if you're purchasing with another FHA loan in Puerto Rico, it just needs to make sense to the underwriters about your employment, right? Like why are you wanting to purchase again? Like if you're getting transferred for work, or maybe you've outgrown the previous property, they may ask a question like, well, why are you wanting to purchase another home in Puerto Rico using FHA? And so long as the answer makes sense, you're good to go. And then there is a rule that says that if you purchased with FHA once, you need to wait at least 1 year before you're able to purchase with that program again, because it is only for your primary home. And so the underwriters for FHA are going to be very sensitive to, if you just bought another property a year ago and now you're buying again with FHA, they're on the lookout for folks who might be literally, well, I'll call it like it is. They're looking for folks who are lying on their loan application, saying, "Yeah, I'm buying with FHA," so they can get access to the benefits of that program, versus buying an investment property with an investment type loan program, which has a bigger down payment, higher interest rates, and all those kinds of things. So that's what that's called. If you're lying on your application, if you know it's not going to be your primary home, and you lie on your application, that's called occupancy fraud. It's illegal, and it can get you, your loan officer, your real estate agent, lots of folks in trouble. So please don't do that. They are on the lookout for it. So it really should be for a property that's going to be definitely your primary home. Okay, here's some benefits. And honestly, FHA is literally, I think it's my favorite loan program to help folks use in Puerto Rico or wherever. Also licensed in Florida, and our company as a whole operates in like 9 other states. I love FHA loan programs to help people buy, especially in the current market conditions. Let's talk about why. So currently the rates are lower than conventional by about a point, right? It's about a full percentage point lower right now than what we're seeing for conventional primary home purchases. The minimum down payment for FHA is only 3.5% versus conventional is typically more like 5% minimum conventional. VA and USDA let us go with 0, but this is still a really great benefit, I think, because it's a little bit lower than what we see for conventional. And then here's another really cool detail is that even if it's a multifamily property up to 4 units in Puerto Rico, we can go with just a down payment of 3.5%. That's in comparison to conventional loans in Puerto Rico. To buy a 2, 3, or 4 multifamily property type property in Puerto Rico, then your minimum down payment for conventional loan is going to be 25%. Now, some people might be like, well, hang on, now we have 5% available on conventional multifamily purchases in the US since last year. That is true. You can go with 5% down on a multifamily property up to 4 units if you're going to be living in one of those units, but only in the continental US. And this is because there's only one company after Hurricane Maria, there's only one company left in Puerto Rico that does mortgage insurance, right? Not property insurance, mortgage insurance, insuring the loans. And they are just not comfortable with the level of risk of insuring loans with only 5% down in Puerto Rico for somebody's a multifamily property. So the best next option is FHA, I'd say. I mean, 3.5% down on a 4 unit or 2, 3, or 4 unit property is pretty sweet. So that's, I think, is one of the best benefits. Here's another really good one. Another good benefit is that we can go all the way down to a FICO score of 580 and still get you a mortgage, which obviously is going to depend why your FICO score is down at 580. If there's a bunch of recent like late payments on mortgages, well, that other thing might disqualify you. But if just, if everything else is okay, maybe like you had some trouble, folks go through hard times, and their credit gets a little beat up. But if they're, in the last year, things are coming up and you're up at 580 and don't have like lots of late payments and derogatory trade lines, we could get you this loan, I believe, right? Another good thing is that, that there is seller credit and lender credit available. So that could be a potential way to help reduce costs. Seller credit for FHA, it caps out, I believe, 6%, right? And lender credit, that all depends on you. That would be a conversation we have or that you have with your loan officer asking, okay, what's the maximum amount of lender credit that I could get? If it appraises over the contract price, we could even, that makes it a little easier to negotiate some seller credit in there too. And here's a really great other benefit for FHA is that it allows us to stretch your debt to income ratio to 55%. Now, what does that mean? Because conventional loans, basically, if you think about your gross income, right? Imagine that, pick a number, right? I'll just pick $4,000 a month. And for a conventional loan program to help somebody purchase their primary home, we can only use 50% of their gross income towards all of their debts, right? So the future loan monthly payment, any current monthly payments they've got for credit cards, car loans, all other debts, things like that. So that's called your debt to income ratio. We can use half of your gross income for you to purchase on a property. Now, FHA lets us use 55%, so a little bit more than half of your gross income towards debts. Now, that doesn't sound like a big difference, it's only 5% difference, but dollars and cents, if you're trying to purchase a $200,000 property, that little 5% difference lets us stretch your purchase power, assuming that your income would stay the same. Lets us stretch your purchase power by another $30,000, right? That can be the difference maker, right? That could be the difference maker between winning an offer or not. That could be it could be very helpful. So that's another really great benefit about FHA. We can stretch your income further. And another really nice thing about FHA is that if you go to this QR code, it has FHA offers a list of pre-approved condominiums that are already approved by the FHA that we can use to help you purchase a condominium in one of those communities if you find a listing, right? So this is great because if you're aware of for conventional loan purchases for a condominium, there's a whole bunch of hoops we got to jump through to get the condo approved. It's like an 8-page federal document from Fannie Mae that we send to the association to get things approved. It's a bunch of things we got to do. That's for conventional. FHA, all that work's already been done, right? But beware in Puerto Rico. So if you go to that QR code and you go to that link and you search by state Puerto Rico, you will see that there's honestly just not a ton of properties that are eligible and that qualify. So it is kind of a shorter list, but there are ones that it'll tell you, look, this one's already approved. So if you can find a available listing in one of those communities, that's a really good sign. So these are all the benefits, or some of the benefits of FHA. So a couple other things. This is an important bit of detail about the maximum loan amounts. So I don't know why I put that on there twice. So for a single family home purchase, right, with FHA, the max loan amount is $498,257. A very oddly specific dollar amount that FHA lets us go with to help you purchase your primary home. But note that that's the loan amount maximum, right? So any higher that you want to go above that, totally cool, but you'll just have to increase your down payment. Now, if you want to know, using the FHA's minimum down payment of 3.5%, that translates to a total purchase price of about $516,328. That would be the purchase value. And then after your 3.5% down payment, that would leave a loan amount of exactly $498,257, right? So I know that's a little wonky. Just if you want to round the numbers off, just consider it that the max loan amount for FHA is going to be right about $498,000, a little under $500,000 for the loan amount. But if it's a 2-unit, then the max loan amount becomes 637,950. There on the right-hand side is what the purchase would be, including the 3.5% down payment, right? So that difference again is the down payment to get this would be the purchase price, 661,088. This would be the loan amount. Here's the loan amount max for 3 units and for 4 units. And so I'll leave that there for a second in case anybody wants to screen grab it. Yeah, I see there about the QR code. The QR code, let me go back to that. There you go. This QR code takes you to the website where FHA posts the condominiums that it's already approved. It should. I tested it this morning. It should work. Hopefully, it doesn't go some other strange spot. But that's what that QR code is for. I see. Got a question in the chat there. So thanks for the question. But those are the max loan amounts, folks. Which in Puerto Rico, I mean, you can. There's lots of places that you can find. I think that that I can find. I'd be happy to live in places up to these loans amount. I don't know about everybody, but that's about what it looks like. Okay. And again, oddly specific loan amount numbers, but each year these loan amounts, max loan amounts usually go up. So hopefully by the end of this year, we'll see that go up too. All right. Okay. So I've talked about the benefits of the FHA loan program. Here's some challenges that I see again and again, specifically related to when folks are purchasing in Puerto Rico, right? So the number one challenge I'd say is repairs getting called out on an appraisal. Now, this is because there's no two ways about it. The FHA loan program, one of the things that makes it so great is that how they manage risk, like the borrower's risks, okay, of all of the people that have an FHA loan program. But one of the ways that they do that kind of can be a challenge is that they require that the property that you're buying with the FHA loan program needs to meet their minimum property requirements, right? And they have a higher bar than conventional. So if you figure these are the kinds of things that I typically see get called out or mentioned if there's repairs that are needed on an FHA loan, because basically the way that it works is if you're just using a straight FHA purchase program, we would order the appraisal. The appraiser goes out. If they see anything that doesn't meet the minimum property requirements for FHA, they write that on the report and they say, this needs to be fixed before we can close. Okay. And so then it comes usually in Puerto Rico, the buyer has to pay to fix those things before we can close, which is a little risky, right? Because, well, one, it's not ideal that it's more money coming out of the pocket while you're trying to buy the place. Two, it's less than ideal because, well, what happens if you pay to fix this other person's house and then we don't close? What happens to your money? You just paid to fix somebody's place and then we didn't close. That's obviously not cool. So it is a bit of a risk factor, though. Thankfully, very often these repairs can get done so that we are able to close. But here's the things that I most often see: appliances. So if you visit a property and it doesn't have any appliances, or if it's missing an appliance, FHA requires that it have all appliances and that they're all functional for us to be able to for you to be able to purchase with FHA. This is most common in the kitchen, right? Got to have a stove, the fridge, those kinds of things in place and working. Another big one for FHA is paint. There can be no chipped or peeling paint anywhere, and also evidence that any like humidity or moisture is like seeping through is going to get called out. It's going to get mentioned. So making sure that the paint is completely not having any chips, not having cracks, those kinds of things. Interior and exterior paint is what they look for. Old septic tanks. Holy cow, we get this one a lot. It doesn't have anything to do with like the number of taps necessarily. Though the septic tank, it does have to be, I believe it's at least 10 feet from the actual like property, like from the actual like building. But we get called out a lot for septic tanks sometimes, especially on older properties. So that one can get called out. If you're out there shopping, be looking at, if it's on septic, go look and see if you can find the septic tank, see how old it is, ask them when it was last maintained, and all those good types of questions, and if it's ever been certified recently, right? Because septic gets called out a lot. Electrical stuff, you might have seen if you're shopping sometimes in Puerto Rico and other places, you'll see like an electrical outlet literally above the shower head, and that's the that's the hot water heater connection. That's not allowed. FHA can't have you can't have electrical outlets in your shower. So that gets called out sometimes if it's like other types of electrical things like missing a cover or exposed wires, things like that might get called out. smoke detectors. Property has to have a sufficient amount of working smoke detectors. And then sometimes there's other little specialnesses that get called out, like weird random things that might just be specific to a property, like handrails. Like handrails on stairs get called out a lot for FHA. Like they need to be every staircase or ledge or ramp has to have a stair, has to have a handrail, and it can't be loose. This has been called out a number of times. So there you go. Another thing to note is that FHA loans, regardless of how much money you put down, it has mortgage insurance as part of your monthly payment for the life of the loan. Okay. Like I said before, FHA is great at managing risk for their buyers. That's how they can go down to 580 FICO. That's how they can go with only 3.5% down on multifamily properties. And the reason that they can do that stuff is because everyone with an FHA loan in the country is paying a little bit in their monthly payment for mortgage insurance. And so that's just a feature versus conventional. If you put 20% or if you put 20% down at closing, or if after making payments, eventually you have 20% of equity, then your mortgage insurance requirement goes away and your payment will drop by that amount. FHA, one little challenge is that we got to make sure that the numbers work with that little bit that they tack on in there for mortgage insurance. Okay. Oh, here is my least favorite challenge about the FHA loan. And it's called the FHA self-sufficiency test. If you're not familiar, here's the idea, right? Imagine that, and this I should mention, it only applies to multifamily properties of 3 and 4 units. It does not apply to single family homes. It does not apply to 2-unit like multifamily properties, only 3 and 4 units. Here's the deal. Imagine that you're a lender. You got millions of dollars in the bank and you're trying to identify like who are you going to loan it to? And that basically somebody buys a house and then immediately after closing, they default and they stop making their payments, right? But it's a multifamily house. So you, the lender, would want to know how much can you rent that property out for, and you'd want to be confident that the rental income after the borrower defaulted would be enough to cover and make the loan payments for that person who defaulted on the loan and that you evicted and kicked out after foreclosing on it, right? Okay. So the FHA self-sufficiency test is just that. Basically, what they look at is that the rental income coming from the property that you're buying, again, only for a 3 or 4 unit, that the rental income has to be greater than the what we call the PITI, the PITI, the principal, interest, taxes, and insurance. It needs to be more. The rental income needs to be more than the monthly payment, right? There's a little bit more to it. I'm not going to bore everybody with those details, but there is an extra bit of math. And the important thing to note, though, in the general case, is that it's only long-term rental income is what's considered, not short-term rental income values, right? Lenders don't look at that, and they're going to ask the appraiser to give the opinion of how much do they think that those units are going to rent for in that market. And once the appraiser puts it on that report, that pretty much sets it, right? And usually appraisers put lower numbers than what we tend to expect. So this is really important because basically, if like, you know, you can be highly qualified for an FHA loan. The property can look beautiful, not need any repairs. We're good to go. But if the appraiser puts on there, when they go out and do their visit, that it would not generate enough long-term rental income to cover the mortgage payment, stuck, right? We're stuck. There's ways around it, but it usually involves either asking the appraiser to reconsider the rental property income, if you can get that to happen, if you can provide information that they'll increase the rental income, or that the borrower has to bring more money down to get the loan amount to shrink so that the monthly payment falls below the amount of rental income that's getting generated. Okay, so that's the self-sufficiency test. Super duper important, more so on like bigger, higher ticket purchases, though, if I'm honest. And then yeah, that's the moral of the story, is that the appraiser is going to give the opinion of long-term rent. Like they're not going to, it can be making, you know, the seller can tell you it makes $30,000 a month in short-term rental income, and that's awesome. But appraiser is only going to ask how much does it generate if you put somebody in there on an annual lease, right? And that's the number that we got to go with. Folks, that's literally it. I didn't have, there's not too much else. I mean, this is a super great loan program. It's very straightforward. It's available to anybody in the country. It's not like you gotta, you know, have certain other types of things. Obviously, you know, we're gonna do the same qualifying routine in the application of credit, income, and assets, and making sure all those things fall in line. But thank you so much for coming and visiting here. I do see I got a question asking about the QR code. So someone asking code. QR code. Not here. Let me go back to that. So this QR code here is to my calendar, right? If you're interested, if you want to talk to me directly and you want to book a time with me to discuss, if you're qualifiable or what any questions that you got, you can go to that link there. This QR code should take you to my calendar, and you can book a time whenever it's convenient for you. The previous QR code, though, I think I see somebody asking about, goes back here. This should take you to the FHA condo approved list of condominiums. And well, it takes you to like the general page, and then you have to filter it. There's an option that you should select to go just to Puerto Rico, and then it should allow it. It should allow it there. So let me see if we got any other questions. So okay, here's a common question. So like employment and those kinds of things, specifically about like employment history. If FHA is a little bit strict about employment history, so what they're typically looking for are folks that you have to be in the same line of work for 2 years with minimal gaps. If you've been switching employers a lot in 2 years, that could be a challenge for getting approved for FHA. But so long as you've been working in the same line of work and that there's not gaps between employers, should be no problem, right? Should be no problem. But folks, thank you so much. I really appreciate those of you that came and tuned in. I see that I went for a tight 35 minutes. That's pretty good for me. I tend to be quite long-winded. Let me go back down to my contact info. But I'll sit tight here. I'll kind of hang out in case anybody has any other further questions. But thank you all so much. Again, I'll be posting this on the Facebook channel. So on the YouTube channel. So feel free to check if you tuned in late, or if you have other questions or just want to check it out. I'll put the recording up there, and I'll be attentive to if anybody has any questions. But thank you all so much for coming and joining us on this webinar today about FHA in Puerto Rico. My name is Nate Stewart, loan officer here at CoLab Lending. Thank you so much, and I will see you guys next time.